Good evening and thank you for having me here today, Financial Express. Since the introduction was more for me as a finance minister and the tenure that has been so much described in Anand's statement, there are a few things that I would want to speak about. I know there's going to be a question-answer session afterwards, but I think it's the best occasion for me to draw your attention on how the Indian economy has had this 10 long years where the challenges of the initial years and the position that we are in today may be different, but they are not by accident. They are due to the kind of efforts that have been taken and the kind of reception and absorption by the people, the stakeholders, in every one of the policies that the government has taken. So I will certainly elaborate on some of them, and it might be just appropriate for me to say it here because it is something which you have done, we have done together, and that's why India is where it is today. It's certainly an honor for me to be here to talk about banks, and with the jury having identified the best banks, it's just the right thing for me to be here and see what's going on. But Indian banks and their turnaround story is not just for us to celebrate today, but it is going to make a lot of academic interest come in the form of further writing up on how this was managed. And the significant turnaround that the Indian banking sector has achieved is actually the best thing to happen, not just for everybody, but in this function I can say the jury, therefore, would have had exciting time to see how the turnaround has happened and therefore who are the ones who stood out even in this exercise of turnaround. So, Indian banks have always played a very crucial role in India's economic development, but all the more now and all the more from now hereafter. So the attempt has to be to balance the government's priority sector lending, but yet talk about sustainable growth and India's aspirations. The common people's aspirations are such that we need to have newer growth level achieved, and therefore the levers are in the hands of the banks. RBI's financial stability report, which came out late June 2024, that the Indian banks and the Indian economy are remaining robust. Banking sector's health, scheduled commercial banks' gross NPA ratio fell to a multi-year low of 2.8%. The net NPA ratio is 0.6%. Are these numbers which we would have believed had we speculated in 2014 that it is possible? Absolutely not. The NPA and the net or gross was all so heated up, and it was just not imaginable that across the board all the banks would benefit from the reforms undertaken and that their net NPA ratio would come down so much. The capital adequacy ratio for the scheduled commercial bank, capital to risk-weighted assets ratio, that is the CRAR, at 16.8%, common equity tier 1 ratio is 13.9%. So the healthy financial system is the one which can finance growth opportunities. Look at the figures for non-food credit. It grew by 15% for 23 and 24 and has sustained that expansion as of July 24 as well. Credit to industry, driven by steady demand from industrial MSMEs and a pickup in the credit appetite of the large companies, has also grown faster during the last 8 months. Listen to this. This was a surprise for me. So that has grown faster in the last 8 months, that is January to July 24, than the 5-year CA, than the 5-year CAGR from 1920 to 23-24. In other words, the reform, the coming out of the woods by the banks, has resulted in speedier credit growth. And that can be seen in the last 8 months compared to the 5 years before it. So today, I can safely say, although India has always attempted to take banking to all the people of the country, I can safely say that every Indian is intimately linked and connected to the banking system now like never before. Whether it is the JAM Trinity which has brought that miracle, or whether the UPI which has brought that miracle on board, or the ONDC, the Open Network for commerce which can be used by people, account aggregators who manage to give small ticket loans, and the Digi Locker, which is something which we thought earlier it will be only used by high net worth individual, but now it's available for everybody and people are familiar with it. So the inclusive, seamless banking service is happening because of all this. So the new digital economy has actually leveraged it in such a way that billion bank accounts, billion mobile phones, and 1 billion digital identities is what is India today. So with this and with the kind of advantage that technology has given us, we are able to move fast to reach the aspirational classes of people so that growth and development and its benefits can be truly democratized. So due to favorable policies and the regulatory support which has been given by the government, things are moving faster than people expected or speculated on. A lot of political capital has been spent by Honorable Prime Minister himself in that for pushing the digital, for taking up schemes which will make people to become savvy in using the digital infrastructure which was spreading. I think that political capital being invested is actually seeing common people benefit from all the schemes, benefit from the traction that the global situation has in turn given to the Indian economy, and as a result we are able to take the developmental story faster, much before the world is able to assess it. So not just recovery, but simultaneously working for affordable and formal financial sector reforms, and that is what is giving us the leap forward. So 53 crore people have opened their accounts under the PM Jan Dhan, zero balance accounts with minimal documentation. And that actually has taken a lot of advantage in the sense the Bima Yojanas could be given to them with minimum premium, whether it is for accident cover or for life. This actually has changed the landscape of common people feeling that there is something happening about them for them to be financially more empowered. Exponential growth in the digital banking area has made has been made affordable because you have mobile data, which is the cheapest in India compared to anywhere else. When data becomes cheap and common people are able to use it in their feature phones, not just smartphones, there is no reason why common people wouldn't want to benefit from it. And purely because of that, much against the speculation of very many people who suspected that Digital India will never take on, today you find Digital India literally in every corner of the country. I've had this experience once when I went into the streets to buy something on the street just for the fancy of it, because I thought, oh, it looked fresh and green, I should take it back home to Delhi. QR code was very clearly, visibly displayed. Small merchants prefer it because they don't have to search in their drawers for giving cash which is left behind or coins to spare. And therefore, the simplicity and the ease of doing business at that level has mattered. So every facet of the banking system is now available on the phone and people know it. They get their messages about their credit into their account. They get messages about what is expected to be paid for small premiums. So that has really actually helped the system itself and the country as a whole. UPI today, I was just exchanging some thoughts with some of the visitors here. 50 crores have been achieved as of September 2024. Would we imagine in this country that that kind of a rapidity with which digitization will be accepted by the people? But that's what has brought in the change. The digital KYC, the Know Your Customer, is also something which I thought is worth recalling, and that's made life easy. There are, of course, complications still which we need to address, but on the whole, today you do not physically have to present yourself to a bank. Today, I was even pleasantly surprised that very many banks do have a video KYC, that an elderly citizen wanting to prove that he's alive so that he can get his pension continuously doesn't have to go to the bank. He can sit at home and have a video conversation with the branch manager and his work is done. And that is the kind of acceptability of digital applications which has gone into our banking system, and that is what is helping. There was also this concern most often expressed to me about savings at the cost of growing investment. Is that right? So I would want to just give one thought here. Digital investment platforms have actually done a great service for India. It has made middle class see where it is possible to invest either through the mutual funds or opening a direct demat account and working, or stocks or bonds. As a result, post-COVID, you have many Indians willing to take that risk and enter into the market rather than comfortably sit in low interest paying deposit accounts. So I'm not suggesting that this is better or that is better. It is up to the individual to take a call where he wants to put his money, and as much information on all of them should be made available for our citizens. The number of demat accounts, I'm never tired of saying this, the number of demat accounts surged to 17.1 crores in September 2024 compared to 2.31 crores sometime in 2014. So that kind of a 7 times increase in 10 years is a remarkable change in the way in which people are looking at how to deploy their funds and earn more. Unique mutual fund investors has also grown. It was somewhere in the range of 1 crore in 2014. Today it is 4 crores, again 4 times increase in the last 10 years. The number of mutual fund investor folios has also gone up from 8.38 crore folios as of 30th June 2019 to 19.10 crores as of 30th June 2024. So this kind of change is not insignificant. We need to note it, and we need to ready the economy to be able to give space for these kind of people's own decision making a big difference to our markets. The Indian mutual funds asset under management has doubled to 66 lakh crores from 25.48 lakh crores in 2019. So the post-COVID move is across the board. It's not just going to one activity in the market, it's across the board. In a span of 5 years, the asset under management has actually increased 2.5 times for the mutual funds. So access to credit equally has also become easier. Credit availability through priority sector lending, whether it is the PM Mudra scheme, stand-up scheme or Svanidhi, has made it possible for collateral-free seeking of loans from the bank. And that has enabled a lot of small traders to believe that they can carry on without the middlemen who otherwise were very, very difficult to handle. But today the banks, because of the sovereign support which has come in, the backing which has come in, have lent to small businesses. consent-based aggregators, that framework has facilitated 42 lakh loans amounting to 42,300 crores till March 2024. When we launched it in about 3 years ago, there were only few people who came about. Today, the cumulative average ticket size of loans facilitated by the account aggregators is pegged at 1 lakh on an average. So, account aggregator ecosystem has 163 financial information providers and about 475 financial information users of that information which is being provided. 2.12 billion financial accounts, including 1.64 billion bank accounts, are all in the account aggregator regime. You can just imagine the rapidity with which people are benefiting from these instruments which we bring in the financial world because of India's lead advantage in fintech. Responsible use of credit cards are also making a big difference. Today, 2 crore credit cards which were in 2014 have gone to 10 crore credit cards issued, and this is cumulative figure, not unique card holders. So there's rapid change in the way in which India's fintech has made many things possible. I repeat, the full credit for financial transformation goes to the people of India. So the way forward is something on which I'll spend a minute. The health of the banks actually determine the health of the economy and the financial health of households. Sustaining the longevity of banking and financial institutions is both from the user side and also from the policy side. Over-lending, meaning the risk is insolvency. Under-lending affects profits and economic growth, are a problem. Banks will have to be carefully balancing between the two, and the right prudence in lending to create profits while keeping yourself away from risks is what creates the best banks. And that's what you've selected today. To those banks, I certainly have a few words. Cybersecurity risks are got to be planned. We need to be staying ahead of the curve on it. Use futuristic technologies, whether it's AI, big data, cloud computing, machine learning, very required for the customers for providing personalized accounts. For financial institutions to use as tools for mitigating risks and also fraud managements. And for the regulators to use them as oversight mechanism and real-time monitoring capabilities of the regulators can be improved by adopting the technology. And there will be huge demand for cybersecurity professionals, which banks will have to make sure that they are not going to be stingy about recruiting them. They are going to be your firewalls, literally, physically, because otherwise the digital firewall will be ineffective. And I take this opportunity, and I'm sorry for those who are waiting to get the awards, I take this opportunity, a moment, to invite banks and also institutions which are closely working with the banks to offer their participation in the PM internship program that we have launched. And from the 12th, the young people of the country will be allowed to use the portal to register and seek positions for 12 months of skilling on the shop floor itself or on the desks, at the desks of these companies. It will help in creating a greater awareness about what is required for jobs. These are internships, they are not jobs. But by this internship, we honestly believe the youth of India will be able to get a picture of what is expected of them. Most of them well-qualified engineers still suffer from lacking that set of skills which they need to be employed. And therefore, I invite all of you all to participate in this PM Skill internship program, which will give us, our youth, the advantage. Other than that, of course, the fintech industry is contributing much more rapidly than what we can imagine. I continue to support them. We certainly need them to do everything that it takes to make India a lot more tech savvy, particularly for our financial sector, which will be the key driver towards Vikasit Bharat. So in conclusion, I would only say I celebrate the excellence that you're awarding today, and all the participants would be keen to know who the winners are, but the winners are going to be the champions for us for the next 25 years, so that all of us can see a developed India, so that the future generations can be proud about the work that all of us have done together. Thank you very much.
I now like to hand over to Mr. Shamal Majumdar to take the conversation ahead from here.
Well, I've been given just about 15 minutes, so we have to really rush through this. Nirmala ji, first thing is that, this Modi 3.0 government, it has completed 100 days in office last month. Now, what has the experience been? How do you compare the majority Modi government with the Modi-led coalition government? Has the pressure on you increased as an FM?
No, not at all. The pressure on us ministers to deliver, to perform, to hear all the stakeholders has been the same since 2014. Nothing has changed for us. In fact, in the first 100 days, I think the data was given out, more than 15 lakh crores have been part of the cabinet's decisions. Decisions on major schemes, all totaling to 15 lakh crores have been taken. That cannot happen without enough groundwork. So the pace continues to be the same, if anything, even faster now, because you're looking at 2047 more closely than you did earlier.
No, I was talking more about the political pressure on you because of the coalition politics itself. For even innocuous decisions like lateral hiring in government jobs had to be withdrawn because some of your allies were not happy with it.
I don't think that's the way I look at it. Each time a decision is taken, you want to launch a project or you want to take a step forward, if inputs of critical value come in, we'll always take it. There wasn't any coalition when some of the earlier decisions had to be worked again so that we come up with a better, well-tailored scheme. So it's not at all the coalition compulsion. It's more meaning to deliver better.
Right.
And there's no political pressure on us.
Okay. Tomorrow is monetary policy. So I just couldn't resist myself asking this question. What is your view on this discussion around the inflation targeting framework? It should change. RBI should focus only on core inflation, leave out food and crude, which is volatile. What is your view?
No, I think there's a lot of debate which is required on this. And I wouldn't yet take any position about whether food should be in there, food should not be in there. But certainly the CPI basket and the WPI basket don't seem to have much of a commonness, because the WPI basket probably has certain items which probably will have to be in CPI, and the CPI also has some items in the basket which probably don't have a contemporary value as it was once. So thoroughly looking at the components in the basket, which after all is finally the instrument through which you are assessing the impact of inflation, will have to be period relevant.
Right. Imagine this share of manufacturing, you must have heard this question several times, has stagnated at 15% for a very, very long time. I remember during our interview with you, just during the elections, you said that India needs to do something in order to give a boost to its manufacturing, and you would welcome a dialogue with industry. What actually they want. What has been the progress, and how do you think this can be improved further?
The dialogue continues with the industry, and I still welcome any industry leaders who are here to engage with the government to see what best has to be done to make their participation even more significant. I think in the environment of China Plus One, when PLI was brought in, there was a lot of question about whether it will be effective. The sectors were identified. The sunrise sectors were given the priority. And with that given priority, PLI was rolled out. Today you find that except for one or two sectors, in most sectors where PLI has come in, has actually brought in a quality of difference to manufacturing itself. The numbers are always reeled out about the, mobile phone manufacturing. But that's the case because you tend to see how much is getting exported, and therefore you think that has happened only for the mobile phones. But I find the interest in renewable energy, in the semiconductors, in the chip manufacturing itself, and also the other aspects of semiconductors are all rapidly changing, and for the better. So also the other elements of the green energy, whether it is hydrogen, whether looking at the advanced chemistry which is so required for battery and battery related issues, there's just a lot of change and approach which the industry is willing to show. And together with it, in the last two budgets, where we have given R&D a push by creating the Anusandhan Kosh, and also prior to the Anusandhan Kosh giving 10,000 crores towards research and development, has actually brought the industry to believe the government is really looking at it wholesomely. And it's not just incentivizing that additional marginal production which will happen, but also is investing to bring private sector on to R&D together with government or aside from it as well. So the Anusandhan Kosh is also a long-term incentivizing on R&D so that newer industries will benefit from research.
Congrats on BJP's spectacular victory in Haryana today. The question is that you see this race to competitive populism. Congress during Lok Sabha elections used to say khatakhat paisa, but even if you see some BJP-run states, for example, in Haryana itself, the BJP manifesto talks about 2,100 rupees for women and 2 lakh government jobs. The state where we are in now, Maharashtra, has also given this Ladli Bahin scheme. One of your cabinet colleagues has also talked about how this will reduce the money available for industry. Several Congress-led government states have also done. Where will this end? How will states continue to do this? Is it sustainable at all?
What is sustainable is different from the freebie debate that we are talking about. Sometimes those which can be supported by budget are also seen as freebie, because in general we tend to think anything given to the poor people will have to be a freebie because they don't deserve to get it. I think there's got to be, looking back at India's history, money was spent in what was not freebie, and people thought that's good, it has to happen because it's budgeted, it goes through a certain process, and the money reaches those who deserve it. But the money never reached. At that time, we didn't think that was, oh, what a waste of money. We thought, no, it has to go, you have to give houses, you have to give drinking water, you also have to give some promotion for their businesses and everything else. But today, the very same arguments are being turned around to say, no, freebies. I'm not in favor, let me put this very clear, I'm not in favor of freebies which cannot be sustained in your normal welfare kitty. Normal welfare kitty being, you have to support the poor, you have to handhold them for their education, you have to make sure their health is improved, they are not going to spend out of their pocket for taking care of their health, and so on. So you probably know I'm categorizing things based on a state's fiscal capacity to take on. But I also don't need to name states because it's very obvious where promises were given which they couldn't sustain. And also along with this, the committed expenditure of some states itself reaching more than 50%, 60%, some states 80% of their budget goes for committed expenditure. These are ways in which you have to have a holistic look at the states and their finances and have a long-term, at least a medium-term plan to make sure that the finances of the state will come in such a way that you're able to spend for the development aspirations, equally taking care of the welfare. But if you just be a freeloading state with committed expenditure being high and also newer sources of revenue not being identified, if a state is very good at tourism, they just depend on tourism without looking at other sources which can, strengthen their revenue generation. But we give a larger kitty for, welfareism is not going to help. So there has to be a lot more, not these, I'm missing out on the word, we don't need to have a discussion just at the layer of, oh, is this a freebie, is this not, is this worth it, is this not? We should have a debate of what constitutes the freebie. Is it truly the kind of, today it's come to be a very much criticized word. We don't want freebies, but you cannot in that name deny the poor the help that they need to get for some more time until they come out of the pathetic state of poverty in which nobody wants to be in poverty. But if you are able to extend some kind of help, it should be in alignment with the your budgetary and also your fiscal situation. To be away from it and to justify it in the name of welfare will not hold good. And to be away from it and still insist on giving it will tempt all of us to say it is a freebie. That contemptuous language with which we say that's a freebie, as different from the welfare measures. Even if they were inefficient, we were ready to accept it. We need to make them more efficient. We need to make them more transparent. We need to avoid pilferages in them. So all of us will have to apply our mind to see that we are not gathering ourselves only to talk about the notorious freebies. We don't want them. But yet, if a system improves, if there's more efficiency in the system, you may not want those tempting freebies either.
The India story, if you see since 1991 and then 2014, of course, has been a story of great prosperity for a certain section of the population. But somehow, successive governments have been unable to craft a strategy to bring the next 150 million people out of and give them that same prosperity. So this has led to this great inequality debate all over the world, including in India. What is your take on that? How do we, ultimately there is an inequality in consumption, in everything. So this is a problem that I'm sure as a finance minister you are also grappling with.
Consumption, I would think, is getting better both in rural and urban areas because of the various targeted schemes with which we have addressed the issue. Not to say that that's the end of the story. We need to have more support as and when we can extend them. But consumption can be supported not just through revenue expenditure. Consumption can be better served through capital. And that is why, as a conscious call, government has taken a view that our expenditure, which will be through the capital route, is the way in which we can boost consumption and also remain clear that our expenditure will create assets. The multiplier resulting out of that is far more than the multiplier that you will have for the ways in which you boost consumption through directly putting money in the pockets of people. So that is one of the ways in which we are trying to target and bridge inequality. Also access to education, access to skilling will make people rise from where they are. So there are one or two more such approaches that we take to make sure that the gap can be bridged.
You have repeatedly talked about that banks should stick to core banking. Do you mean that banks should stick to retail lending only and not get into project lending?
No, I'm saying it for two reasons. One, banks should be the first source of mobilizing deposits. Now, your best banker did speak about it, didn't he? the way in which his bank has got transformed is on the back of core businesses doing very well. We need to have that because bank, I repeat, will have to gather deposits and lend. I'm not saying their core businesses should get confined only to that. They can, of course, support projects in a very conscious way, medium term and not very long term, but looking at how they manage their deposit and lending. It cannot lead to once more that horrible situation that Indian banks were in, where there was asset liability mismatch. We cannot have that situation again. And it is because of that asset liability mismatch situation, banks took longer to get back to being healthier. It all happened simultaneously. Asset liability mismatch, you were starting lending long term, borrowing short term, and therefore you're not able to keep that cycle going. So you got into that situation, and together with it, to aggravate it, was also this phone banking where, cronies were being given loans which you couldn't retrieve at all. So banks will have to be conscious of what they do and how they do it, and essentially those which are very much in the bank board's hands are this avoiding of asset liability mismatches. And that is why it is not for them to go for high risk long term funding, which is the business of the NABFID, the National Bank for Financing Infrastructure and Development. It is their business for long term funding, high risk funding, not the scheduled commercial banks.
These corporate profits have been growing at a very decent pace, but if you see the net fixed assets that have declined, when do you think, what do private companies tell you? Why are they not investing?
I thought the media will inform me on that and tell me that, look, that is where they are, why won't you want to take some action on them? I'd like to hear from you all.
No, I want your views on.
I'm as informed as you are.
Okay. Now I think I think the last question I'll ask, because you have to leave. Regulators should be like Caesar's wife, above suspicion. Given the context, what has happened in SEBI, how do you see it? Because do you think there's some monitoring mechanism required for regulators in India, or the regulatory governance structure is fine?
I think there is a lot to be looked into in terms of the facts which are coming out on this matter. There's just no way in which all of us sitting around here can say that no, there's Caesar's wife business and therefore regulators will have to be above board and keep throwing things without looking at the facts which are before us. I strongly recommend that facts are taken on board before we discuss anything to do with the regulators. Strictly speaking, and I don't want this to be a correlation to the question that you're asking, I'm consciously saying it's not just in correlation with the question you're asking. Indian regulators and the way in which they are functioning have actually brought greater transparency to the system. And Indian regulators are being now looked up by even their peers outside for the way in which rapidly the Indian markets, the Indian banks, the Indian insurance sector, and also the way in which we keep our books are all being regulated by our regulators, and they're doing a world-class job. So we should be extremely cautious, and I'm not against any kind of questioning, I'm not against any kind of review or critiquing, but we have to be extremely conscious that we look at our regulators for what they've done as well.
Nirmala ji, thank you very much for, as usual, you are as candid as ever. Ladies and gentlemen, a big hand for her, please.
A big thank you. What an insightful conversation that was.
Just one political question. Just quick 2 words. Your lesson after the election victory today. One lesson for BJP and lesson for Maharashtra.
Lesson for BJP is keep working as you've always done. Don't believe in false campaigns. People are with us. You just have to be clear that you have to reach out to them and talk to them about the good work Prime Minister Modi is doing. Lesson, I don't want to say lesson for Maharashtra, but Maharashtra BJP is now going to repeat what Haryana BJP has done.